Hello, 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 everyone. Welcome. My name is Jeremy Blossom. I'm the founder of tradestocks.com, and we are very excited to get started. I'm just waiting on JC to arrive. If everybody can hear me, give me a heads up. Go ahead and put in the chat feature here. Where are you from? I am coming to you from my office here in Laguna Beach, California. I'm happy that things are starting to get back to normal. Let me know if the restaurants in your town are open. Is your favorite restaurant open in your hometown? Mine just opened up last week. So they were doing takeout, but now they actually have, you can dine in. And we couldn't be more excited about it. So let me know. And we're going to get started here in just a minute. Also, oh, okay, great. Charles says effective tomorrow at 2 p.m., 25% capacity for a dine-in. Yeah, it's about that with us as well. I don't know about you guys, but it's a huge relief that we're all kind of getting back to normal and some of these small businesses are opening. I've got friends and family that have been really affected in one way or another by all this. And it's just sad. So I'm excited that we're starting to see some normality. And I know there's a lot of chaos that's happening in the world. But we're going to try to navigate the best we can through all this. JB says, yes, great, but every other table and bar are closed. And he's really close by. We're here in Laguna, about the same, exactly. Like I said, I'm experiencing the same thing, and that's great. I'm getting good feedback here on the video quality today, which makes me excited. I don't know if you guys like my new setup. I figured I'd change it up for tonight. And last week, I wasn't able to do this webinar because we had a lot of office construction happening and it's just way too loud. You might hear a little bit tonight. They're doing some things on a wall just behind the camera. So we'll get that going. I'm glad to hear it. And as always, I want to know if everybody is doing okay in their portfolio. How many people are making money right now in the stock market? Say yes if you're making money in the stock market. Say no if you're not, out of curiosity. All right, it's got somebody that says, yep, I am. Yes, yes, awesome. Is anybody shocked? Is anybody shocked about what's happening in the marketplace? I'd love to hear that as well. There he is.
Hey, what's happening?
The man of the hour.
What is up?
I'm just getting to know our audience tonight. So far, we've gotten some people that told me that their favorite restaurant is open, only 25% of the capacity. How about you, JC? Is your favorite restaurant open for dine-in service?
My favorite restaurant around here never had delivery, so I don't have a choice. But I've been picking it up. But I don't think you can eat there yet. It's a Japanese place. Shocking. My favorite restaurant is a Japanese joint. But I did order sushi. I had it with a little bit of sake, a little junmai daiginjo. You're into that sort of thing?
I have no idea what that means. Did you just call me a name? I'm not sure.
Junmai daiginjo, that means the junmai means that it's not mixed with anything, right? And the daiginjo is just a way that they, because they have to take out on the little rice kernels, all the crap on the outside. They take all that stuff out because it's the inside that's the clean what you're drinking. So the more of that outside that's no longer there, the higher the quality, if you will. So that makes it a daiginjo relative to a ginjo, and the whole thing. Needless to say, nice florality and is beautiful with sushi.
I am I'm actually really upset that when you were here a few months ago, I didn't take you to get sushi just so I could hear all of these wonderful things about sushi and sake. I totally forgot that you're completely obsessed with it.
Yeah, man. So I think I'm Japanese. I had to have been Japanese at some point. I love the cuisine. I love the culture, the architecture. You know, for me, whew. And then the move. You want to know the move?
I
The
would love it.
move is you go to fresh French restaurants in Japan and you go to Japanese restaurants in Paris. That's the move.
Ah, I see. And I was just in Paris last year. Did not know that. You should have given me the heads up.
A little, yeah, because I mean, those are the best cuisines in the world. So when you put them together, woo, forget about it.
They know their food. I actually would agree with you. I think that in my past life, I was also Japanese or something because I absolutely love, I could eat that every single day. No questions asked. So it's really good.
I just got invited to speak at the, I'm going to totally butcher, but like, you know, the Tokyo Society of Technical Analysts. It's definitely not what it's called, but it's like what that would be. And I got invited to speak and they want me to, you know, me to be the keynote and the whole thing. So if you want to tag along, let's go.
I absolutely, when is it? First of all, maybe before I say
When
yes.
we can. I mean, it's one of those like open invite sort of situations, like whenever I can make it, you know, if it just happens to be January when Hokkaido gets the most amount of snow and we have to go skiing, that might just have to be what it is.
You know, that's well, it is a proven fact that the best technical analysis is done in the months of January, February, and March. So, you know, we can't, who are we to deny?
Facts only.
Well, awesome. Well, it looks like a lot of people are starting to show up. So this is great. And all right, great. He's like, oh, I'm in on that road trip. Got some people here saying that they want to go. This is great.
Let's go. Let's do it. You guys down?
I'm down, man. I'm absolutely down.
That would be so cool.
I know Itai's always down.
We did Charge Summit in Colorado. So why not Charge Summit Hokkaido? It snows like a foot of snow per day in January.
Wow. Oh, so he's got it like amazing snow. That's all we need is good, fresh snow and some sake. And we're golden.
Fresh powder, sake, charts. I mean, come on.
Yeah, that's amazing. Well, listen, I know we got a lot to cover tonight, so I wanted to get into it.
We have a new guest?
It looks like it. We might have somebody. Hey, Lauren, how are you?
Hey, Lauren, what's up? She just popped in to say hi. I popped into one of her meetings the other day. I don't know if she told you.
I heard that actually. And
I thought it was I was in the meeting. I'm like, hey, everybody, what's up?
They said it was really funny, which is great. You know, because you're here, Lauren, it is you who keeps logging into my account because I'm getting this notification that says you've been signed out of your account because someone else has signed in. And that just happened right before she came in here. But if you could see me, I could see you, JC. What do you think of my new background? I added a real plant behind me.
You look good, man. You look great. Like I'm like struggling. My new office is being built. I haven't had a haircut in a minute. I mean, I am struggles McGee over here. But you know, so you're looking sharp, man. Good for you.
Thank you. I also kind of getting a little long on the side here, but
oh, stop it.
It's okay. I did have one cut in COVID. I did. I went and snuck my barber came in through my back gate, went in my backyard and cut my hair in my backyard. True story. But I knew we have a lot to talk about. So without any further ado, JC, I'm really excited to meet with you. I know we weren't able to meet last week, but our tradition is staying alive. We're meeting once a week, everybody. And we're here to talk about the COVID crisis. That's what started this whole thing. We knew that the markets were going to show some volatility. They did. We also knew that the markets were going to show opportunity. They did. So with that being said, it is a new month. And I know we've got a lot to talk about. So I'm going to give you the controls here, man. Take it away.
You know, I really think that this is a time that we really need to reiterate something that I think is really important. And, you know, there's just a lot of investors out there that have somehow convinced themselves or allowed the, you know, poisonous media, if you will, to convince themselves that what's in the news is what's driving price behavior in the market. That the market cares at all what your evening local news journalist thinks.
Yeah, right.
Like that is like the worst thing that you can ever believe, is that the market cares what these journalists think about anything. I mean, listen, they're great people. I'm friends with a zillion of these journalists in every network under the sun. Has nothing to do with them. They're reporting what's going out there, what's supposedly people want to hear, right? They're they're in show business. They're in the entertainment business. They're not there to help you make money in the market. They're there to distract you from making money in the market. That's their business model, right?
Yes.
So our job as investors to ignore them. And this is just exhibit A. Everyone's stuck at home. No restaurants are able to open, or like maybe opening one day. We can't go. There's no sports. The world's coming to an end. Everyone's stuck at home. There's riots in every state. You know what I mean? Thank the holy Lord that I don't watch these news networks, because I can only imagine. And I talk to my grandmother who does watch this stuff, and she tells me, I'm like, Abuela, why are you watching that? You know, you're 90 years old. There's nothing you can do about it. It's not your fault. Like, why are you like subjecting yourself to this?
Yeah.
She's like, like in Spanish, she's telling me, tú ves lo que está pasando allá en Nueva York, ten cuidado. You know, I'm like, oh, well, you need to stop like now. Like, this has nothing to do with you. It's not your fault. You're 90 years old. Like, go back to watching your novelas, you know. So, but that's the advice that I would give every other investor, you know, you can't do anything about this stuff. And the market certainly doesn't give a damn that all this stuff is happening, because we're making new all-time highs in a lot of these areas. We haven't had a conversation, Jeremy, since the monthly charts came out. And the bottom line is new all-time highs in communications, technology, Dow Jones Internet Index. There's so many indexes making all-time highs. And what do we know about all-time highs, Jeremy? Is that they are not a characteristic of a downtrend. We do not, mathematically, we do not see all-time highs in downtrends.
No, you don't.
We see all-time highs in market environments that reward investors for owning stocks.
Yep, 100%. And it has been, so I asked everybody, I go, who's shocked? Who's shocked by what they're seeing in the market? And I asked everybody if they're making money in the marketplace. And I got a lot of people that said, yes, I'm making money in the marketplace. I didn't get answers yet on whether or not they were shocked. I was trying to set the stage because I knew you're going to go there. That's been a big conversation that's been had here in the office as well, is what they're seeing on TV is not showing up in the markets. The riots are not showing up in the markets. And it is the news outlets that draws those correlations, folks. The market doesn't like the riots. The market doesn't care about that. That is all rhetoric given by talking heads who have about that much information in their brains about what actually makes these markets move. So I'm glad that you're setting the record straight. So
this is just a good example, right? This is always the case, but this is just a very obvious situation where there are riots in every city, and you know, pretty much in every city and every state. You know, we're all stuck at home, and Dow futures are up 300 points, 600 points, 700 points. Doesn't give a damn. So
nope.
it's just a very great case study. But we can always go back, you know, to other times, and I always preach this, but now it's just so obvious that those of you who've been fighting me on this for so long can I get a finally?
Yeah, I agree. And there was also some big other things that were being done behind the scenes. That the big bill was passed yesterday about the PPP loans. You know,
maybe. If you say so.
No, there's some big things that are happening behind the scenes. All of that though is being reconciled instantly into the price of these companies and price of these stocks. So
totally.
They're, you know, thinking that you're going to somehow see a headline and that's opened up this magical portal of profit that you and you alone are going to discover. Not so much. It's much easier to follow JC's methodology. So what are you seeing, JC? Let's take it to the top. Let's go macro like you like to do, and let's look at some charts.
I think, Jeremy, you know, as cliche as it might be, and as often as you hear me say it, it's whenever in doubt, zoom out. I mean, that is just the bottom line. You know why? And we like looking at monthly charts. You know why? Because it forces you by looking at monthly charts to make it impossible to ignore the direction of the primary trend. It's impossible. You know, it's really easy for us, especially as humans, to get stuck between the, hey, Jeremy, what the market do today? Like, I don't know. Let's say I was surfing all day. I don't even surf. But let's just say that I was lucky enough to live in Laguna Beach like you, and I did surf, and I was out surfing all day, and I call you and be like, yo, Jay, what the market do today? You'd be like, oh, what would you say? You say, oh, the Dow was up 100, or the Dow was down 50, or it was flat, right? But you'd be referencing the Dow. You know, when we talk about, you know, what did the market do this week? Oh, it was all over the place this week. Oh, Janet Yellen, or, you know, Powell, or, you know, coronavirus, or all this stuff. But all that does, you know, earnings season. Oh, did you see, you know, work, whatever. When you zoom out to those monthly charts, all that disappears. Literally, it disappears. It's gone. Whew, like at the end of what's the name of the movie? The Kaiser Sose. He's like, disappeared, right?
Oh yeah, yeah.
Usual suspects.
Yeah. Yes. Thank you. Yes. Usual suspects. Yes,
usual suspects. So here, let's just keep it simple. This is our monthly workbook. So what you're seeing here, right? You can see that, Jeremy?
Yep.
So what you can see here is all of the monthly charts that we look at the end of every month. So it takes me about 30 minutes, 45 minutes, you know, depending on, I usually go back, I usually do it twice, but it takes me, let's just call it half an hour, 45 minutes. And I do this 12 times a year. This is the best 6 hours of work I put in every single year by far and away. And because again, it forces me to go back. So our clients have access to all of this. Anybody who's a subscriber to All Star Charts Premium. And you know, you can go chart by chart. You know, you look at the S&P 500, you know, Dow Jones Industrial Average, Dow Jones Industrial Average Futures. So we go one by one. And what are we seeing here in the NASDAQ Composite? We're seeing all-time highs, Jeremy. All-time highs in the NASDAQ Composite, all-time highs in the Qs. What does that mean? What that means is that they are making the highest prices ever. There has never been more demand for the NASDAQ ever than there is now. And remember, people are like, well, it's overextended. It's the, you know, it's the most overvalued ever, you know, whatever it is that these people say. The truth is the NASDAQ really did nothing for, you know, what, 17 years, 16, 17 years. So the fact that it's, you know, we can argue that we're probably in the early stages potentially of something like that. But the fact that we're making all-time highs in the NASDAQ is not reason to be shorting stocks. It's not reason to be selling stocks. I think it's reason to be buying stocks. And with that, I do have something else I'd like to add. It's not just the market that is giving us all this information. I mean, I guess it does indirectly. But you know what else is really interesting? Is analyzing our behavior, analyzing the things that we've been doing. So let's go back, Jeremy, a couple of months, and what have we been talking about? Remember, like in like early March, we built the coronavirus index. Remember that?
Yes, that's right.
What was that? They were stocks in March. Like technically, we didn't know the market had bottomed. We literally published this on March 12th, which is the day the market bottomed. We didn't know that at the time. It's just a big, you know, whatever. One for the good guys, I guess.
Yeah, right.
You know, the S&P and the Dow, and they all went to make new lows into, I think, March 23rd, if I'm not mistaken. But the low for the market was March 12th. That was the day that we had the most amount of new 52-week lows. You know, most sectors made new lows. So by the time the indexes made their low on the 23rd, most stocks had already bottomed already a week prior. So it's actually the day we came out with the coronavirus index. And all that was stocks showing crazy relative strength, crazy momentum readings that we were not seeing in other areas. They were the standouts. Things like Zoom, things like DocuSign, right?
Yep.
And obviously those were huge winners for us. Okay, so that was the beginning. So what were we doing then? We were being super, super picky, like crazy picky, like only buying the best of the best, stay away from the rest of the garbage, right?
Yes, right.
And then that worked. And then we were, I mean, between you and me, we were under the impression that that was just going to be a counter trend rally. That was going to be a rally that was eventually going to fizzle away. And what's happened? We've gotten sector rotation, right? The worst beat up names like industrials, like financials, freaking airlines, money's rotating into those areas. So sector rotation is the lifeblood of a bull market, no doubt about it. A bearish thesis in equities was consistent with those lagging stocks, transportation, you know, airlines, financials, regional banks, those lagging areas dragging the rest of the market down. That was that bearish thesis. The bullish thesis was that we were going to get rotation into that area, into those areas, really confirming that this is not a bear market rally. it is not a dead cat bounce, but actually something more substantial. We're not about to collapse into a new low like into March of 2009, but in fact, that is already behind us. And now we're in April, May, June of 2009, coming out of that V-shaped recovery. And then not only that, but what about the information we're getting from ourselves? Have our shorts worked at all? When we shorted small caps, how'd that work out? When we shorted industrials, how'd that work? I mean, I guess the Caterpillar did work, but that was short term and it did work. And our options trades work too. But for the most part, like the money we're making is not in the stocks that we've been shorting. The money that we're making is the stocks we've been buying. Like, right. Unfortunately, we've been buying a lot more. We've had a lot more buy opportunities than short, but we've been playing on both sides of the market. And when we look back and we tally what's been working and what has not been working, shorts, for the most part, have not been working, and our longs have been working very, very well. So those things that we're doing are rewarding us better than those other things. So we're going to stick with what's working.
That's right. Keep it simple, not try to fight the trend. Why? So I agree. At the time, and you know, this is what I love so much about you, man, is that it is a full totality look back at what was going on and what was transpiring. And so the markets were not quite reaching those all-time highs. We would get, or not all-time highs, getting back to those levels, weren't breaking above those levels. JC talks, everybody, and if this happens, then this. If this, then this. If this, then this. And he talks that way, and this is a perfect, the last 4 to 6 weeks has been a perfect example of why you think that way, right? Because if you were to go up, we're going to have, you know, it's not going to be a V-shaped recovery. It's going to be a W. You know, we're going to see another bottom, and it's going to be a deeper trough. And you just decided to blatantly make this huge, bold prediction. Not if, then, just that's what it's going to be. You throw a truckload of money into it and saying, yeah, we're going to lose a little bit of money as this market kind of comes up, but trust me, it's going to come right back down. You'd be sitting here licking your wounds and, you know, trying to rationalize why the market's going to maybe do whatever. And then you become just like everybody else, one of those talking heads. And instead you're like, well, here's the thing. If the market stays below this number, then we're going to consistently fade, right? If the market goes above this number, then we will look at going long.
I want to tell you a little story, Jeremy, right? Those of you, some of you who are watching this webinar have been following me for a long time and remember that. And in summer of 2015, I was end of the world bearish, Jeremy. Like I was like, Deutsche Bank is going to zero, end of the world, short everything. Like I was that guy, okay? And this was summer of 2015. And that worked out really well. I was actually in the process of moving to California as the market was crashing. And we rallied, and my bet was that this was a dead cat bounce and that we were going to roll over. And we did into the beginning of the year. I remember even having a bet with somebody that didn't believe in trend lines. And I was like, if this breaks, watch the market collapse. It broke and the market collapsed. So it was like, I remember that specifically, the Dow specifically. So anyway, I'm end of the world bearish, Deutsche Bank going to zero. This is 2009 all over again. Credit spreads ripping, you know, everything that is like bear market is taking place. And then what happens? 2016 January, we make a low. And then on that second low, we had a ton of bullish divergences, breadth improved, ton of stuff. So as bearish as we were, we got bullish right here, right? Actually over here. At the end of January is really when it was. And then we really started confirming as we started moving higher. But I was in the camp at the time, from the bottom of my heart, you can go back, it's all there. I thought that this was a dead cat bounce. I thought this was just a counter trend rally, and my bigger picture thesis of the world coming to an end and Deutsche Bank going to zero and all that stuff was eventually going to come to fruition. That didn't stop us from buying stocks. In fact, we were buying stocks very aggressively. If you remember, gold miners freaking tripled, like monster moves in the gold miners, metals, Latin America, all that stuff. But we were in the camp that this was just a dead cat bounce, but a great one. And our price targets were getting hit in April and May. So here I am, and I'm waiting for the market to collapse. And then what happened? The market wasn't collapsing. The market was holding out. And you know what happened? For Morgan's birthday, my now wife, my girlfriend at the time, we went to Cabo San Lucas. And this was at the end of June. And I went out there and I poisoned myself with cactus, you know, cocktails. and I, got away from the market. And, I remember reading Market Wizards. I remember reading that by the pool and drinking tequila. Had a great time in Cabo. Freaking awesome. And I know you've been, so I don't have to tell you.
Yeah.
Freaking awesome. But anyway, got away from the market. I went, neutral to bearish, neutral at best. Bearish was where my head was. I get back, big cash positions, our targets had been hit. I get back from Cabo. I started looking at charts. I'm like, oh my God, we need to buy everything. So and then, the rest is history. They call it the Trump rally, but that's a bunch of, the market had already been going up for a while. Why am I telling this story? Two things, two lessons. Number one, I thought this was a bear market rally. I thought this was a dead cat bounce. And that's why we were buying stocks, because dead cat bounces and bear market rallies are the best rallies ever, right? So
Yep, that's right.
You want to be buying stocks in that environment for sure. So we did that. Our reason was because it was a dead cat bounce. But now that we have more information, that original thesis that we were buying for a dead cat bounce is now, hey, maybe this is 2016 all over again. This is not a dead cat bounce. And now that we're getting more information, we can make that prognosis that there's something more substantial out there. And this could be a much bigger trend. And we are erring in that direction right now. So that's number one. Number two, get the hell away from your screens, man. Get away. Because if you're just, overdosing on charts all the time and you just don't, you can't get away from that and look back in and then recalibrate yourself and come back, you're doing yourself a major disservice. You don't have to go get drunk in Cabo. You can take a week off and go to the park with your kids and have a staycation, if you will, and stick your computer in a vault or something like that. I don't have that discipline. I have to leave because I'll be oh, hey, I'm just going to look at a few charts. So I have to leave, but I recommend everybody, take a break a couple times a year, at least once a quarter, ideally.
Yeah, no doubt. We at our company, we usually say this phrase a lot: rest is fuel. So if you want to go after it even more, just like an athlete or anything else, you got to have rest times. You got to have down times so that you can come back and stay focused. When you're in an analysis mode, it becomes, I think, even more paramount that you're constantly taking breaks and checking in. When I was studying for my Series 7 exam, which is the license that you need to have to buy and sell securities on behalf of somebody else, I'll never forget the instructor who was helping us study for this test. She was a huge proponent that in test taking, every 10 questions, when you're finished with your 10th question, stop, close your eyes, take 3 big breaths, slow inhales and exhales, slow inhales and exhale, 10 more questions, inhales, exhale, 10 more questions. It just was a way for you to kind of reset, recharge, gain fuel, gain momentum. And she had been telling people to do this. And, a lot of people are well, we only have a certain number of time. It's a 5-hour long test for those of you who don't know, right? They give you, it's 5 hours long. You get, I believe it's 3 hours for the first section and 2 hours for the second section. You have an hour, up to an hour long break, or you don't have to take any break at all. By doing her method, I had finished and passed the test in less than 3 hours, which is a 5-hour long test. So it worked because I was focused and engaged, and everything was firing for those 10 questions, took a break. And I didn't need that hour break. People who sit there and mull over, your synapses stop firing and you start spiraling and you start seeing things that aren't there. So yeah, good story. Cabo sounds way more fun to take a break than taking 3 deep breaths. But yeah, nevertheless, good stuff. So now that we've kind of said, hey, this is not a dead cat bounce. We're seeing some things happen. Where are you seeing the big opportunities to make money, JC?
I don't necessarily think that you need to change things up. Here, let me show you what I'm looking at. I don't necessarily think that you need to change things up. what's working, that's the great thing about relative strength and positive momentum, that it's a leading indicator. So like, stocks that were showing positive momentum and like ridiculous relative strength back in early March are doing great today. Like, shocker. Like, if that wasn't happening, it would be shocking. You know what I mean?
Yep.
So what I wanted to show is that we're getting rotation into areas that we're not getting any love, and that in and of itself is the signal. So what are we seeing here? This is Latin America, gotten absolutely crushed. This is what we call a downtrend, right? Obviously. Now we have a consolidation, right? And what do we know about consolidations? That consolidations tend to resolve in the direction of the underlying trend. But what happened here? That's not what happened. We did not resolve in the direction of the underlying trend. In fact, we reversed. That in and of itself is the signal. Let me show you something more obnoxious. Here's Brazil, which really tells that story of Latin America. Nasty downtrend, consolidation that should resolve in the direction of the underlying trend, resolving higher instead. Those are the signals. Where are regional banks? How are they resolving their consolidations? Higher. Transportation stocks, how are they resolving their consolidations? Higher. So let's talk about let's look at a daily chart of, this is the US 10-year yield. Look at the consolidation, resolving higher. So the way I see it, bonds are rolling over, gold's rolling over, Japanese yen is rolling over. That looks like a risk-on environment to me. Money's coming out of safe haven assets, which is the opposite that we were seeing in January as money was flowing into bonds and yen and gold, before the market collapsed. That's, leading indicator. Money was flowing into safe haven areas. Credit spreads were blowing out. We're seeing the opposite now.
Yeah, we're seeing risk on. That's right. So risk on, and the spectrum is in investments. We've got the bonds as like a safer haven. You're looking for the yield type of a play. And then you've got stocks, because stocks can go out of businesses, right? Or it can go out of business. You can have lawsuits. You can have missed earnings reports. You've got volatility. And so when you hear expressions like risk on, you're going into these more riskier positions. And that is the stock market, as we know.
Yeah, and we're seeing evidence of risk appetite rather than evidence of risk aversion, is really the way we like to look at it. Money flowing into things like, Brazil, Latin America, the Philippines, not exactly safe havens, if you will. These are areas of speculation. If that's where money's flowing, is it because they're so scared? Or is it because they're optimistic about the future? And it's not a coincidence that money's coming out of bonds and gold and Japanese yen, which are those safe havens. So what do we like? Here's an interesting software stock. By the way, software made all-time highs. For those keeping track at home, all-time monthly closing highs for the software index. And here's RealPage, RP. I like this consolidation over the last couple of years. I also like the risk reward. So this is a stock that we only want to own if it's above 65. Because if we're below 65, Jeremy, that means that we're back below all of that support, right? All of that resistance. So what do we know here is that all of this is overhead supply. So the bet that we're making is that the demand has now been able to absorb all of that overhead supply that has now taken about a year and a half, couple of years almost to absorb, which is pretty normal after a monster freaking run, right? So monster run, consolidation. Consolidations tend to resolve in the direction of the underlying trend, particularly long ones like this. And we have a well-defined risk reward, only if it's above 65. If it's not above 65, too much downside risk for me. But if we're above 65, I like this sucker long. Target $96, $100, $100 roll. Why not?
Love it. I love it. Everybody write that down. We got RP above 65, 95 is the target. I agree with you. I love the risk reward ratio on this trade. It looks really good. So, all right, one down. That's good.
Let's take you back a few years. What's that song? I'm gonna go back, way back into time. What song is that?
I don't know, but I know
you know what I'm talking about, right?
I know exactly what you're talking about. Yeah.
Way back.
My sister could tell you what the lyrics are to pretty much any song, who sang that song, what year. She just has one of those brains that pull it out. JC, I couldn't tell you My kids make fun of me. I'm so bad. I'm like, isn't this Taylor Swift?
It's one of those old R&B joints. You know what I'm saying?
Yeah.
All right. So listen, so I'm going to go back, way back. So this is the summer of 2016. And what did we see, right? We had treasury bonds breaking out above the former highs from early 2015, right?
Yep.
In a consolidation that is a classic textbook. Like this is like, you learned this like on the 4th day of technical analysis kindergarten, that this is a continuation pattern and should resolve higher. But what happened? It did not. It resolved lower. And look what happened, right? So this is what I'm talking about that we're currently seeing in Brazil and Latin America. We're getting these consolidations that should have resolved lower, resolving higher. So basically what we're seeing is the opposite of this US Treasury bond situation. And look at those implications. So I'm just telling everybody, keep an open mind. The market doesn't care what your local journalist thinks. The market is going to trade based on supply and demand dynamics. And if there's more demand for stocks than supply, whether you agree with it or not, prices are going to go higher. And that's what we're seeing. So in this kind of environment where we're seeing all-time highs, we're seeing new 52-week highs, we're seeing consolidations breaking out, not breaking down, resolving higher, not resolving lower, continuation patterns that should have resolved lower, resolve higher, defensive areas breaking down, consumer staples making new lows on a relative basis. These are all characteristics of the type of market environment that rewards investors for owning stocks rather than rewards investors for selling stocks. And I can tell you this from the bottom of my heart. I've studied markets. I've participated in, any kind of market you can imagine. And that's just how markets work. And we need to weigh the evidence and say, okay, are these the kind of things we see when markets are crashing? And sometimes people are like, all right, JC, we get your obnoxious, sometimes I lay it on a little thick. But I think it makes the point. Yes, obviously, new 52-week highs are not a characteristic of a downtrend. Thanks, JC. But think about it from a philosophical standpoint. We're taking all of those characteristics, all of these things, credit spreads tightening, interest rates going up, not down, gold struggling, yen breaking down, like all of these things. Are those the kinds of things we normally see when we're being rewarded for owning stocks? Or are those the kind of things we see when we're being rewarded for selling them? And, by far and away, it's the types of things we see that when we're being rewarded for owning stocks. And by the way, are we being rewarded for owning stocks, or are we being rewarded for shorting them? And that's quite obvious. The big winners have been the longs, not the shorts.
100%. So many people want signs. They're like, can you just tell me what the stock market's going to do? If they pay attention, the stock market will tell you exactly what it's doing. And right now, it is telling you green. The light's green. Go, drive, move forward. And so it'll tell you when it's yellow. Hey, like we've been kind of seeing, it's yellow, and we'll say it's red. Short, risk off, those types of things. So
as my friend Tony Dwyer likes to say, when the offense is on the field. The offense on the field. Run your offensive plays.
Oh, I like that. Yeah, I love that.
Who's
playing? Right? Yeah, who's playing for you? Remember, we're capitalists here. Short, we'll short. Go long, we're going to go long. We're here to make money, and where do we make money, right? So a lot of people don't wrap their minds around that. That gets too wrapped up into the story behind the stock and not exactly what the initial mission is. Our mission every single day as traders is to maximize the absolute nth degree, our capital, maximize it, get the biggest return absolutely possible with taking on the least amount of possible risk every second that we possibly can. Period.
And if we have the probabilities on our side and we're erring in the direction of the primary trend, we're going to be right that many more times than we're wrong. And I think this kind of really speaks for itself. Remember, Jeremy, back in early April, we put together like the bull market checklist. Remember this?
Yes, I do. Yep.
So this is that. And are you seeing a lot more green or red?
This is definitely a totally different slide than The ones we've been seeing. Yeah, a whole bunch more green, man.
And this is an intermarket. You know, we're looking at German DAX, copper gold ratios, broker dealers, home construction, semiconductors, the value line index, Dow theory, market breadth, high beta versus low volatility. I mean, high yield versus versus treasury bonds, right? To get the credit spread look. This is a long list of intermarket relationships that signal whether we're in a bull market or not. And, pretty freaking bullish, if you ask me. So if you would have shown me this a few months ago, I would have said, yeah, that's the type of environment that an environment where we're making money by buying stocks. That's what that would look like.
Yeah.
I would have told you that months ago.
Yeah, 100%. So I'm looking at some of the comments. Some people are a little bit shocked about how bullish, the market has been, considering things. But, we've got to remember that when you don't fight the Fed, you don't fight the government, and the government's come in and stepped in, and they're doing everything they can to try to buoy what was unprecedented, how fast and how quickly these markets and the unemployment rates have fallen apart. And so that's what we're ultimately, there's cause and effect. And so, and at the end of the day, all of those reasons are being reflected into these charts, which is what JC is reading and observing to tell us that that right now the offense is on the field, so continue to go. So I love that, man. I know we've been following a few stocks and a few different sectors, so I'd love to look into gold and see where that's at. You just mentioned to it that thing's coming off. And then I know that a couple people, just for the sake of time, have been asking on a couple different stock symbols. So I'd like to keep this as close and tight to an hour to respect everyone's time. But can you show, and me, man, me and my gold.
I do know you and your gold. You're into this gold thing. If I didn't know you any better, I would think you're from Vancouver.
I know, right? I got some vested interest. What can I say?
So for me, gold is one of those situations where it's either a good buy or a good buy, right? So it's either a good buy or a good buy.
Goodbye.
Right?
I like that.
And that's a real thing. So I'm going to show you guys. So here we go. So what are we seeing? We're seeing a consolidation in an uptrend. Momentum putting in a bearish divergence, but hanging in there. So if we break out, we're going to get a ripper, and I think we go see new all-time highs. Okay?
Okay.
If this breaks down, however, and you see gold below 1680, that's the level. It's a big problem. It would confirm a bearish momentum divergence. We'd get new lows, and then more importantly, these former highs from earlier this year that was resistance that's now been support will have breached. These will be all the dead bodies, and gold comes tumbling down. Okay? 1680 is that level. All right, that's the bear thesis. The bull thesis is that the dollar is falling apart, right? The dollar is going to completely fall apart. This is the US dollar index. Emerging markets are going to outperform. Gold miners are going to rip. Mining stocks, metals, that whole global growth industrial complex absolutely rips. Dollar gets torn apart. That's certainly possible. What do you think gold's going to do in that environment? I'd say it'd probably do pretty well, as a matter of fact. I wanted to show you this guy. So if interest rates are going to go up and bonds are going to go down and regional banks are going to outperform and commodities are going to start going up and the dollar is going to fall, think about what that environment looks like. Weakening dollar, higher commodities. Does that sound like inflation to you?
Sure does.
Have we seen any inflation anytime in forever?
No, we have not.
Right. This is a chart of the inflation protected US Treasury bonds versus the traditional not inflation protected. So in other words, what the bond market is pricing in for inflation for all intents and purposes. And notice how this particular ratio broke below the 2009 lows. and now is back above it. And the way I learned it, Jeremy, is that from failed moves come fast moves in the opposite direction. And this has rip your face off whipsaw written all over it.
Wow.
And if this is that, then the dollar is most likely completely falling apart and gold is absolutely ripping in that environment. So I think that's a really, really interesting dynamic. And I would encourage everyone to follow TIP versus IEF ratio, which is, again, the inflation protected treasury securities relative to the traditional non-inflation protected. So in other words, what the bond market thinks about inflation, which it hasn't thought much about it for a while, as you can see by this chart, but it's certainly set up to potentially see something pretty vicious, you know. And then here's what the weekly chart looks like, you know, getting back above those former lows.
I love it. There is a little bit of a method to my madness. I like bringing up gold a lot because a lot of people think that if the stock market goes up, gold's going to go down, or if gold goes up, the stock market is going to go down.
Nope.
And that's not necessarily true. And what I also love is that what we're doing here week after week by bringing gold up is we're breaking gold down from a technical analysis. So many people want to bring gold into the equation from an economy, macroeconomic, political, whatever reasoning here. You've been analyzing this step by step from a technical perspective only, breaking every single thing down. And what we could see here, I'm not saying it's going to happen, but what we could see here is an absolute rip in the gold market and a rip in the S&P 500 as well. So in the stock market. And so those two things could be happening at the exact same time. And that's basically what a lot of these charts are showing you. And even though there's like a little bit of this divergence now, where the gold markets are coming a little bit down, the stock market's going a little bit up, we could see both absolutely run. And for us as ultra capitalists, we want to make sure that we are on the right side of either one of them, and not certainly on the wrong side. And you're using, JC, this is what I love so much about you. You're using technical analysis and not hocus pocus headline news to make these calls.
Yeah, you know why? It's because that doesn't work to watch the news. You're just poisoning yourself. So of course I use technical analysis. What the hell else am I going to use? It's the only thing that works because it's the only truth. It's not the journalist's fault. It's not the Wall Street analyst's fault. I mean, maybe a little bit. It's not the Wall Street analyst's job. It's not the economist's job. Maybe a little bit. They're good people. It doesn't work. Stop.
Rant
Speaking
over.
of, you're talking about how gold and the S&P, some people think if gold's going up, that stocks need to go down. Here's Exhibit A. Here's 2016. They moved together. So that whole gold goes up is bad for the stock market is nonsense. In fact, gold going up was actually the stock market ripped from there. So that if you really want to go there, you could argue that it was a good thing for the stock market. So, one has nothing to do with the other. There are other factors. It's more of a currency. Gold, I talk to a lot of smart folks, Jeremy, as you're well aware, and most of the stuff you hear me spew out is stuff that I hear on my morning phone call with XYZ Financial or, whatever. This is, the offense is on the field, play ball, that's because my smart friends taught me that, so just, focus on what's in front of you. That's the main idea. And when it comes to gold, I think we treat it as a currency, not as a commodity or like this safe haven asset. I don't buy that at all. Yep. We look at gold relative, price in euro, price in yen, price in CAD, price in Aussie, price in rupee, price in South African rand. I mean, we're looking at gold price and all these other currencies. So for us, it's just another currency. It's really all it is.
I love it, man. Let's take a look at Bitcoin, and then we'll get into some of these ticker symbols.
So the Bitcoin, we have the Bitcoin chart up here. Where's this little guy? Oh, Bitcoin. What are we going to do with these crypto maniacs? I mean, I just feel like they just lost their mind. Like whether you follow them on Twitter and,
it's kind of fun, honestly, man. These guys are, they're evangelists, bro.
Something like that.
Yeah. You've got this like pocket of these same, so I like to look at affinities, right? One person likes this, they have a high propensity to like something else, right? That's what basically affinity things are. So as a, I'm an all lover of psychology, marketing, sales, markets, anything where there's people coming together and things happen, right? And so it's always interesting to me, like the interest groups and what they're also interested in. So you got like futurists, okay? And futurists are all in on Bitcoin because obviously the way that, that's there, but it's those two things. Some of those are like really, really obvious that there's like the 1, 2. And then you've got this like whole other movement. Like, I swear, I know you guys are gonna think I'm crazy, but you got this like 45-year-old I'm cool because I'm buying Bitcoin thing. And like that's like their fun novel portfolio piece, seriously, that they're like kind of getting involved in. So things like that I think are always fascinating. So when I hear them chatter on Twitter or in chat rooms or a different blog article, I'm like, okay, well, who is this guy really? What's his story? So
Yeah, and I tell people, I mean, don't worry so much about what it is, whether it's a Bitcoin or an Ethereum or Japanese yen or crude oil or corn futures or Apple shares or Tesla. It's all the same thing. Treasury bond ETFs, it's all driven by supply and demand. Worry less about what this particular cryptocurrency represents or what sort of fraud you think Elon Musk is up to don't worry about any of that stuff. It doesn't matter. It's just letters and math. Don't take it personally. Like, people overthink this stuff. It's like, oh, I'm not going to sell my Amazon. It's like, oh, your Amazon. You're not going to sell your Amazon because, it's made you so much money. So now it's your Amazon. So now all of a sudden you have like this personal thing, or like, you have a bad experience with a stock. It's like, oh, I don't trade that stock. It's like, why? Oh, because this one time, like 10 years ago, I lost money on it. Okay, so now because of that, you're just going to ignore it for the rest of your life? Like, that sounds like a great strategy. So anyway, when it comes to Bitcoin, like, don't treat it any differently. Like, treat it as a volatile asset. It's a much higher beta than, bond funds, right? So just understand the dynamics of what you're trading. But don't, other than that, I wouldn't treat it anywhere else. Here's a consolidation. These consolidations for years, as you can see in this long-term chart, have been resolving in the direction of the underlying trend. And I don't know that this is going to be any different. So let's just go shorter term. And then what are we seeing here? We had this consolidation resolve down. What have we been talking about? This is Latin America upside down. This is Brazil upside down. An uptrend, a consolidation should have resolved up. It resolved down. So that was evidence that that's over. This uptrend no longer exists. If this uptrend was still in place, it would have resolved higher. As it approached the apex, the buyers and sellers had their battle, right? Because this is the war, and then these are little battles. And they had their battle, and the bears won. So now that we know that the bears own that price, literally own that price, every time we've gotten back there, who won the battle? The bears won. The bears won. The bears won. But we already knew that they were the winner. They got it down. They own it. You know what I mean? Like, they don't lose at home, right?
Yeah, right. Yeah.
Until you dethrone them. And now is up to see if the Bulls are able to dethrone the Bears at that 10,000 level. And the way I learned it is the more times that a level is tested, the higher the likelihood that it breaks. So, gun to my head, are we going to get an upside resolution or a downside resolution? Fortunately, I don't have a gun to my head, but if I did, I would say higher. So this is something we want to own if it's above 10,000. It's something we don't want to own if it's below 10,000. Because if it is above 10,000, then the bet that we're making by taking what the market is giving us is that the demand has finally been able to absorb that supply. It's taken long enough, and now we're ready to resume higher.
Love it, love it, love it. We got JB here who wants to talk about, if you want to go into the Q&A. Let's see. Yeah, let's go in the Q&A. We got Shop from JB, SHOP. Also JNKHYG. So you got this, right? You can see the open ones.
The S, the H, the O, the P. Let me tell you what I want. Right? Right? Yeah. I've been listening to that. What's that station on Sirius Satellite? Rock the Bells Radio.
Ooh, I
You know
like
that
it.
one?
I do. Absolutely. So I've got a Jeep and I took the top off because it's summertime and my 5-year-old calls like, rock and roll, rock and jam. And he's like, Dad, can we go in your truck and listen to rock and jam music? And so I'm like exploring all of these different Sirius XM stations and trying to find some really cool rock and jam, some, trying to get some Dave Matthews into them,
All right.
trying to culture my kids.
All right.
Good music.
Yeah. How about some Beatles? Mix in a little Stones. Come
Of
on.
course. Oh, are you kidding me?
Little Santana.
My daughter's got an amazing voice, and I'm trying to get her to sing yesterday. So I play it all the time.
Oh, nice.
Yeah, I love that song. So yeah, man, I'm all I'm all about that music.
I am too. I don't have a TV in my office. The only TV I watch, my wife and I watch Netflix and stuff like that. So for me, it's all music. A lot of Bowie this week.
Yes,
A lot of Bowie. Shop. Let's talk shop. These Fibonacci extensions go back to 2015. How many people are showing you Fibonacci extensions in Shopify going back to 2015? How many you got, Jeremy?
Boop, right there. 0.
Goose egg. Nobody, baby.
Nope.
Right?
Nope.
Remember that? So much old school. 707, that's the level. We'll hold above that. I see no reason not to stay long. I think it goes up to 1130, but that's the level, 707. Market's been respecting these Fibonacci extension levels for years. I wouldn't ignore it, 707. If this little consolidation up here breaks and we fall below that, the risk is to the downside. But if that keeps holding, we're above 707. I don't see any reason to run away.
I like your strategy on the bull put there, JB. So I would agree with this little recent pullback. So smart bull put strategy. I like it. We got some sophisticated traders here. All right.
Sophisticated.
We'll do, let's see. We'll do one more. Yeah, no problem. JB says, thanks. Let's see. Unless, do you have one? We can do dealer's choice. We have GILD, Guild from James. James has always been here.
Gilead. Let me show you. You want to see something hot, Jay?
Oh, yeah, man.
This is the high beta versus low volatility index ratio, right? So high beta versus low volatility. So this is going up, high beta is outperforming. As this is going down, high beta is underperforming. And talk about a ripper. I mean,
Yeah,
you want to talk
awesome.
about
That
the types of things that you see when you're being rewarded for buying stocks versus being rewarded for selling them. High beta is outperforming. Look at this ripper. That is risk on. That is risk appetite. They're buying stocks. They don't care about your protests. They don't care about your viruses. They don't care about the riots. They don't care. They're buying stocks. Money is rotating into areas that it was not rotating to when we were bearish, right? We were like, hey, they're selling this stuff. We should be selling it too. And guess what's happening now? They're buying this stuff. They don't care about your protests. They don't care about your riots. They don't care about your virus. They don't care about your lack of sports. They don't care about your unemployment claims. None of that. They're ignoring it all. Or it's not so much that they're ignoring it all, is that they're taking that and putting it into context with all the other information that they have. And they have come to the conclusion that the things that you think the market should care about, the market does not. And they're buying these stocks. And this is Exhibit A, exhibit.com, right? It just right in our face. They're buying stocks. So are you going to fight that because you think you're smarter than the market, or you think that the market shouldn't be going up because there's riots in the cities and they're like terrorizing storefronts, and you don't think the market should be going up because those things are happening? This is the market proving you incredibly wrong. So that's my tangent on that.
You can't let emotions rule, man. You gotta, not when it comes to making money and taking advantage of what the market's showing you. So the signs are all there, but yes, I like it.
You know, is this a bearish to bullish reversal? You know, is that what's going on here? You know, momentum's in a bullish regime. You know, is that what's going on here? You know, what I would say is that it might be what is going on here, but man, is it taking forever to get going. You know, people have been asking me about Gilead because what's cool is about talking to so many people is that I see the common denominator. What are the kinds of things that people keep asking me about?
Yep.
They're always asking about Gilead. Everybody thinks it's going higher. It's not. You know, does it look like a bearish to bullish reversal? Sure. You know, the bigger the base, the higher in space. Sure. Kardashian bottom. Sure. All those things, right? But it hasn't broken out yet. You know, it looks like a big hot mess is really what it looks like. Like you could put a smiley face if you want to be nice. But if you really want to keep it real, you know, this is what we're working with. You know, one big hot mess, you know, like I always like to say, like me, like on a Sunday morning in college, like hungover, house is a mess because we had a party and obviously we don't have a cleaning lady. So like this is me on a Sunday morning. College.
Yeah. And again, you just ask yourself the question, is that what you want your capital doing, is waiting? So if you do, then, you know, by all means, park it there. But if you want your money working as hard as possible for it, then I think there are other opportunities that may be better. Now, I'm saying all of this, as we always do, as education. This is not a solicitation to buy or sell any securities. As we always say, I have no idea what your position is. You could have owned that thing for 40 years. I'm not telling you to go and sell it or something like that. So I don't know what your pretenses are before these ticker symbols, but I'm assuming that you're thinking about getting in or buying. So a lot of my comments and JC's comments are about that. So please take that with a grain of salt. And again, you know, consult your financial advisor. And this is just for educational purposes. JC is a master at market analysis, using technical analysis as his approach, which believes that everything's baked into price and that trends are your friends. We like trends. They're our friends, and we make money from them. So that doesn't necessarily mean that you will, or that the markets are going to do something that we say that they're going to do. They could do the exact opposite, because there's that saying that markets could remain illogical far longer than you or I can remain solvent. That was my little rant. And it is 6:01. I want to be respectful of everyone's time. I do want to end it on a very serious note. So as you guys know, the world is in chaos. At Trade Stocks, we stand with love and respect for one another. We are incredibly sorry and regretful for just all of the chaos that's ensuing. We do hope that everybody that's watching tonight and who watches this later in the future is safe, and that that they can do what they can do to make this world a better place by loving. And that's the thing. We gotta to drive out darkness. You need to be a light. So I encourage all of you to be the brightest light you possibly can in your families, in your friendship groups, and at work, and in life. So be good and do good. That's my serious note. JC, you want to add on to that?
Just think before you do things, and it doesn't cost anything to be nice to people. And I mean, I don't really have to try to be nice to people unless like you're like a real asshole. Like I'm gonna be nice to you, you know what I mean? And that has served me really, really well. And fortunately, because of that, I have friends all over the world, and I think about them, especially in times like this. But you know, just think about before you do something stupid. Think about what you're doing. Like, is that really what? Are you contributing to society by doing what you're about to do? You know, so really think about that. And just try to be smart and just be nice. It's free to be nice to people. You know, I see people all the time so angry all the time. Like, smiling helps. You know, come on.
Yeah.
Go hug your mom or something.
Yeah, that's right. And hurt people, man. So just understand that. And what do hurt people need the most in this world? They need a hug. They need someone to empathize and love them. So anyway, all of you be well. JC, you're a gentleman and a scholar. I love this hour that I get with you once a week. We will be here next week, everybody. So keep out a look in your inbox for everything. And until then, be well and make some money.
Adios.
Peace. Thanks.